All right, good evening, everyone. So I welcome all of you on behalf of Empirical Academy on this webinar, in this webinar on uh, momentum trading strategies. So I hope that all of you do a little bit know about technical analysis. You all are either already trading as intraday traders or positional traders, or you are looking forward to begin your journey as technical analysts, or you are already a proficient trader. I have a diverse background of people here in the participants list. I'm sure about that. Now, first of all, let me walk you through the entire structure of how we are going to plan ahead to move here in this session. The first thing we are going to have here is we are going to learn around 1.5 hours approximately about momentum trading strategies. Okay, what are the indicators you can use and what else can we see? That's going to be covered in approximately 1.5 hours, and then in the last half an hour, I'm planning to take all your questions, depending upon how many questions are there with all of you. Completely depends on that. If there are lesser questions, we may also end up the session a little bit earlier than our scheduled time. Okay, so for the first 1.5 hours, when I'm just kind of making you understand the concept of momentum trading, that time we'll be keeping the chat box closed. We are not going to have any questions during that time. And while I am making you understand anything, if you feel that you have a question, you can just write it on the chat box somewhere. Sorry, in your notebook somewhere, and then you can later on paste your question on the chat box. Okay, when we open the chat box for question and answers later on. Okay, so as of now, it is going to be a one-sided communication. Later, we will have a dual side communication as well. So, assuming that most of you are aware of the basic nitty-gritties of technical analysis, you have done some kind of either course on technical analysis, maybe, or you have learned technical analysis on your own. At least you are aware of the basics and the fundamentals of technical analysis. Assuming that, I'm going to conduct this session, which means basic knowledge of how to go long and short in the stock markets, how to trade in an index versus in a derivative versus in a stock, how to identify, let's say, breakouts and breakdowns and trends. If you are kind of aware of that, and what is the architecture of a candle, for example, what are the different candlestick patterns like dojis and hammer, hanging man, shooting star, bullish engulfing, bearish engulfing, uh, some basic form of candlestick patterns if you are aware of. All of this will just help me to make you understand about this momentum trading strategy even in a better way. Now, in case you don't have any about idea about whatever I'm saying here right now, then also it's not that you're going to understand nothing in the session. Then also you will be able to understand a lot of things. Don't worry about it. Okay. Also, because we're going to deal with right now, I'm not showing anything on the screen. The screen is blank, it's white. Okay, there's nothing there on the screen, so don't worry about that. So if you are looking in to get a completely new picture, a new perception towards trading, so I'm here to explain you that. Okay, believe me, momentum trading is one of the best trading strategies ever created in the world of technical analysis. The only reason I say this is that there had been many competitions in the world, okay, in the past 100 years, okay. There have been many open competitions where investors, traders have come in and they have uh, actually competed with each other to show who can win and have the maximum returns in a given set of time. Okay, there have been some celebrated traders around the world who have actually shown their potential, okay, as traders, and they have given consistent profit. Now, there was a survey done with all the winners, okay, of all of these competitions around the world, trading competitions. You know, these you have these challenges and these uh, competitions hosted by a lot of news channels and business news agencies, and some broking houses sponsor them and all that. So it was done across the world, and it was observed that most winners said that they were choosing momentum based strategies. See, there are various type of strategies you can undertake: trend based strategies, volatility based strategies, momentum based strategies in the market, volume based strategies also people have. Many people do swing trading. Okay, now swing trading is a very different concept. Okay, swing trading is basically, suppose there was a swing like this, and then now maybe after this swing was there, you had entered here. Okay, that's your long position. Okay, now the stock is going up, but then it is kind of consolidating then, and then finally it goes down. So now after you have realized that it has finally gone down, maybe you can square off your long position, which means you can unwind your long position here, or you can also short. If you don't have an existing position, you can short here because there is another swing here. Now the problem with swing trading is that most of the time it takes a lot of time between two swings, and that time you have to hold your position. Apart from holding your position, there's no other chance or way to handle this. Sometimes people in the past have said that they had to wait for more than 100 days also for the next swing to be identified. Okay, so the holding period is a big challenge in case of swing trading. That's why many people have recently identified this problem with swing trading, and they have stopped doing swing trading. But it was identified that most of the winners of these competitions are actually momentum based traders. Okay, what's momentum in plain simple language? Momentum is nothing but the rate of change of anything which is speeding in a particular direction. Okay, that's called momentum, which means it is the difference between the current value and the previous value. That's what momentum is. If I would explain this in the context of a real life situation, I can say that suppose we are looking at a moving train, not a burning train, by the way. Okay, so if you're looking at a moving train where this is the speed, okay, and on the x axis here we have the distance. Okay, now ideally you would say that initially when the train starts from the first station, then the driver of the train has to pull the acceleration, okay, to the maximum throttle. The reason is very simple. The reason is that to reach the first station, I mean, actually from the first station to reach the second station, because the train has a heavy load of all the coaches behind it, the engine, you have to increase your momentum. You have to go full on acceleration. So that's basically acceleration on the full throttle. After the train has reached a particular station and a particular speed, what do the drivers generally do? What will they do? Once we reach the second station, we don't need to increase the momentum anymore, because otherwise if we keep increasing the momentum, the train will become unstoppable, right? So what we do is, after that, we just maintain and don't increase the speed, which means after the train has reached a particular point, then we just maintain the speed like this. Okay, normally across the next few stations, unless we are closing on to the second last station. By the second last station, what would you see? You'd see that the person who is running the train for you will start decelerating his speed. Okay, which means this will be called reduction in momentum. Okay, now my question here is that during this phase of rest, was the train at rest or was the speed zero? No. From here to here, the speed went from 0 to 300 kilometer per hour. After that, this speed was maintained throughout, and then we went from 300 to the last station, which is 0, by reducing the momentum. So it means that here also we were maintaining a speed, here also we were maintaining a speed, here also we were maintaining a speed. We were constantly moving, assuming the train never stopped, let's say, suppose. Speed was never zero here as well. Speed was not zero, but the acceleration or momentum was zero. That's why we could just maintain the speed, not increase the speed, nor decrease the speed. So when we increase momentum, speed picks up. When we constantly keep our hand on the or the pedal on the accelerator, but we neither press it further nor we release it, we kind of just maintain the speed. And when we decelerate the momentum here, then we are reducing the momentum and we are pushing the speed down so that we can go to a complete halt situation. So this exact thing happens even in the case of stock markets. Not only have we understood acceleration and deceleration, but we have also understood with the help of this the concept of increase in momentum and the concept of reduction in momentum. Okay, now if you can observe the same pattern on any stock, then the advantage you will have is you will be able to make more money than the others. Why am I saying this? Because the advantage would be that in any up move or down move in any stock, the stock moves like this, right? Even in an uptrend, it moves like this. So there are two zones you can separate. One is the momentum stage. Then there is this flat resting stage. And then once again, it's possible that the momentum is picked up. And then after we reach a particular speed, we again rest, ready for the next journey. So you know what is momentum trading, my dear? Momentum trading is basically trying to catch the movement of the market not in the resting phase, neither in the reduction phase, but in the increment phase, which means we will enter in that stage of a stock where the momentum is increasing, not decreasing, or neither it is flat. No. But yes, every flat resting phase is a precursor to the next move. So basically, we are looking to enter around here, which means either at the beginning of a momentum or during the momentum. Momentum stops after in this yellow area when there is a rest. So either we enter here or we enter here, but we never enter here. And obviously we will never enter if the stock is going down anyways. But if you are a person who also likes to go short, then you can enter here. When the momentum is reducing, you can short a stock as well. So the idea here is to jump onto the stock when the momentum is positive. Okay, then we have to enter into a stock. So we are looking to grab this phase, not this, not this, if we are going long. That's the logic here. Okay. For that, you have to have knowledge of candlestick charts also. Okay. Because before we see any rally, then a base, then another rally, before another rally starts, you see some weak candles. So there are primarily two types of candles. One are strong candles. So these could be strong bullish and strong bearish candles. Whereas we also have weak candles like these. Now, weak and weaker candles will have long wicks. Longer wicks means there is too much of volatility and impatience, but there is no decision between the bulls and the bears because the body of the candle represents open and close. So here this is open, this is close. Here this is open, this is close. But there is a huge movement which has happened across, right? At least. But here, if you see, the movement which has happened is very small, just the range is very high. So the stock is very much volatile, but the bulls and bears cannot arrive at a decision who is winning and who is losing. These type of weak candles, in fact, in some situation, the body is also small, the candle size is also very small, like this. These are all weak candles. Now, weak candles, they always come in the resting phase of a momentum. When the momentum is almost zero, then the weak phase comes. Okay. And when the momentum is strong or increasing, then you'd see strong candles. Now, in strong bullish momentum, when the momentum is increasing and the stock is going up, you would see a lot of strong green candles. Even in fact, the strongest green candle will have no wick at all, only body. Fine. And in strong bearish situations, when there is a reduction in momentum, which means during this phase I'm talking about, when there's a situation like that, then we will be looking in for only red candles which are strong like this, or maybe the strongest red candles like these. So during the increase in momentum, we will be seeing strong explosive candles and not these boring candles here. During reduction in momentum also, we'll see like this. Your duty is to identify the candles along with patterns as well. For example, this is a hammer. If it occurs after a downtrend, then it's a hammer. It is supposed to propel the stock up. So this can act as a precursor to a new momentum which is going to start. So hammer can tell you when the momentum is going to start. This is the resting phase after the reduction in momentum. Again, if the stock is going up, generally you will see something like this. This is called a shooting star. Now, when I draw it in black, it means color of the candle doesn't matter. When I'm drawing the in color, it means color does matter because these are weak candles. So when you see something like this, again, a reduction in momentum has started. Okay. So you can go short if you want to. That's a shooting star type of candlestick chart. This is called a hammer. Okay. Basically, what we are seeing here is that with the combination of the candlestick patterns, the overall formation on the chart, with the application of some basic knowledge, our analysis should be like this, that we have to somehow make sure that we have to enter in the increasing phase. Okay, somehow we have to make sure that we have to enter in the increasing phase. When the momentum is increasing, we will get in and we will exit as fast as possible. Because I told you, remember that in swing trades, the waiting period is long. Generally, momentum trades don't last for more than 7 days. Maximum trading period, which has been found worldwide for momentum based trades, have been considered to be maximum 7 days. There has been hardly anyone who has taken a momentum trade and held the stock for weeks and months. No, because the waiting period is small. The reason is we don't want to waste our time in this situation. You see, we're not looking to waste our time here. Okay. All right. We are clear that we will enter as fast as we can when the momentum starts, and we will have to exit maximum by this time. Now, even if you are entering here and exiting here, there's no problem. Just make sure that you exit before the rest starts. We don't want to waste our time here because there are other stocks where there will be momentum. So you don't want to block your money, block your scarce resource, which is your margin, your money, your capital. So it's a short-lived trade which we do, short-lived trade. Now, what is the biggest advantage of this concept? The biggest advantage is that even if we get our entry wrong, we will not be punished for it. because the stock is already starting its momentum, and for some time it is going to maintain its momentum, then it's going to come down. We have to identify that increase in momentum phase where we can go in. Now, suppose if we got our entry wrong, instead of trying to plan our entry and come here, we actually could enter here. That, let's say here, that's not a problem. We still have enough steam left. Even if we enter by mistake, even if we enter here at this stage, then also I don't mind. Why? Because I will still have this consolidation or the resting phase where the train is going to rest for the same time and maintain the speed. Generally what happens in this phase? This phase is characterized by generally equal number of red and green candles, and all of them are weak in nature. Actually, those people who started here, they book their profits here. But those who started here, they are still holding their bull position, so they will exit here. Those who entered here, they are wondering, sitting by the fence, what to do. But some people who entered here would now want to exit here. Some people who entered here would now want to exit here. So in this phase, there will generally be equal amount of demand and supply. So the prices will be maintained, it will not crash. Okay. After this, if nothing new, no further bad news comes, let's say, then there's a high possibility that the momentum can once again restart. If all the sellers are done selling and booking their profits, buyers can jump in and propel the stock once again up. So it's not necessary it has to go down after this. So if it goes up from here, our duty is to once again be part of the momentum. Okay, right? So you don't need to take the entire cake. You just need to take a small pie in the cake. So the best advantage of this type of trading is the fact that even if you are getting your entry wrong, you will get enough time to exit. You will not be punished as such because you're entering at such an early stage. I can compare this situation like the flow of water in a river or something, let's say. Now, suppose there's a river which is flowing, okay, in a particular direction, obviously. Now, what is the difference between a person entering here and a person entering here? Nothing. No difference. Why? Because wherever you enter, the current will take you down only. Correct? Because you are going in the direction of the river. So entry doesn't matter. Because whenever you join the river, from there, you will be able to get in. Which means that if the market momentum is upside, whichever point you join in, you will still be able to get a higher price next day. When Nifty was 7,500 after COVID, and then it started going up from there, it recovered from the post-COVID crash in the month of March. It went all the way up till 18,600, and from there it came down. Correct? Now just understand, anyone who would have bought Indian stocks during this phase of momentum and exited after 10 days, let's say, or 7 days, would have definitely made some money. It's like whatever I take home, I always am able to take out something out of that trade, which means you buy anything, you put your finger on any stock, okay, that I want to buy this stock. You have put your finger there. Okay, I want to buy this stock there. No problem. Whichever stock you are choosing from the list of so many stocks, if the market is trending up and the momentum is there, whichever price you enter, you will always exit at a higher price only, come what may. You take anything home today, tomorrow you'll be able to sell it at a higher price. That's the belief. I'm not telling you to sell tomorrow. I'm telling you to wait for maximum 7 days. Which means that I'm here to break a myth. Myth is that people say that buying and selling is an art, and the only way to make money in the market is to buy at the lowest price possible and sell at the highest possible price, which is the mantra of swing trading as well. Which means we buy the dips, okay, and we sell the peaks. Fine. So we buy the lows and we sell the highs. That's how the situation is overall. But momentum trading says we buy expensive and we sell even at an expensive price, which means we buy at highs and we sell higher than highs. Because we know that the stock is in a positive momentum, irrespective of your entry at any level, you will be able to exit after 7 days because it's a very highly productive, momentous stock. So, what exactly is momentum? 100, if right now the stock is 100, then it becomes 115, then it becomes 140, then it becomes 170. Are you getting what is happening with the stock? Now, if I say momentum is current close minus previous close, it would be 15 rupees ka difference here, then 25 rupees ka difference here, 30 rupees ka difference here. Stock is going up, but at the same time, the momentum is also going up. So here, the stock will go up like this, right? And at the same time, if I plot this momentum 15, 25, 30, suppose this is the zero line, because momentum can be negative also. So this is momentum from 15, it has become 25, it has become 30. So the stock is also going up and the momentum is also going up. It's positive, first of all. Okay, positive, zero, negative. So not only the stock is going up, the momentum is also going up. But at the same time, there is another stock, 100, okay, 130, fine, 155, 170. Now this stock is also going up. Yes, this is also going up. But if you notice the momentum here, you would find out it's 30, 25, 15. What's happening with the momentum? If this is the zero line, very soon it seems that the momentum can turn negative. So 30, 25, 15 may be here. Now very soon it will become zero also and then go negative also. So the stock is definitely going up, but the momentum is going down. Both the stocks are in uptrend, both have the same starting and ending price. But in one, the momentum is up, the other one, the momentum is down. So it means that we need to find out those stocks where on a daily basis, the move in the price is not only increasing, but the difference between the close price of previous day to previous day, which is also called rate of change. The rate of change should be positive. That's what we're looking for. Which means in case you buy this stock here, you sell it here, you will make money. You buy a stock here, you sell it here, you will make money. Don't worry. If you buy it here, you will sell it here, then you'll make money. If you buy it here, then also if you sell it here, you'll make money. Which means it's a river flow, current flow. You make money anyway. But that's not the case here. Suppose in this situation, if I want to buy the stock here, but the momentum is dying, so it's not necessary that after 7 days I will get a higher price, because it seems that the projected path of this stock is this, whereas this is like this. So my idea is to buy a stock in the initial phase of its momentum as much as we can. Avoid the resting phase, and obviously we will who buys a downtrending stock? No one does anyways. So a momentum stock means you are already at an advantage. This advantage no one can actually challenge. It is a real advantage you have got. This is what momentum trading is all about. The overall concept is this. Now, there are various ways in which people interpret this. Many methods are there to interpret this. Okay. Even if we mistime our entry, we will still make profits because we are entering and exiting for a very short time, for a very short period of time. We are in a hurry always. In swing trading, that opportunity we don't get. But in momentum trading, we get these type of opportunities very easily. Generally, as I said, our trades will last for only a couple of days, not more than that. Because every time a stock moves, after that, it has to take some rest. After that, whether it goes up or down, that's a different story. So we know that the move, whether upside or downside, will not last for that long. Na? So there is no time wasted in momentum trading, no margin wasted. Constant profit is only possible in momentum trading. Now, all the market leaders have always said that they only follow momentum trading and nothing else. Stock selection is very important for this, which means, first of all, if you ask me about technical analysis in general terms, I'll say technical analysis works best in the top 200 stocks. Large cap stock, mid cap stocks, they work best there. But if you ask me, you really want to do momentum based trading, which means in short span of time, you want to make a lot of money and with highly volatile and stocks which are in great momentum right now, then I'll have to tell you to go for mid cap stocks or maybe some small cap stocks as well. Some. So maybe you can look into buy stocks between the top, let's say 200 to top 500 stocks of our country, something like that. It is a deviation from our normal belief that technical analysis should be done in the top 200 stocks. That's correct. That's basically for trend based trades, volume based trades, when you need mass psychology to work, when you don't want to take a lot of risk, when you're going to hold your trades for long. This is a different concept. The stock selection in momentum based trading is generally to be focused on those stocks which are market leaders. Okay, which means which generally outperform the index. Now, obviously, in our country, we follow Nifty, correct? Now, whatever is the performance of Nifty, let's say in the last 3 months, okay, suppose Nifty in the last 3 months has gone up by 20%, okay? So we need those stocks which have performed better than 20% in the last 3 months. Those stocks are obviously in some kind of momentum. We need those stocks. But the problem is that if Nifty has gone up by 20% in a month, hardly any large cap stock you will find which has gone up by 30% during that time. You have to resort to mid cap or small cap stocks because there you can get the potential to have these type of movements. So we need to find the market leaders, and market leaders are those stocks which are performing better than the broader market, which means Nifty or otherwise. So first of all, we will have to compare the movement of Nifty and the return of Nifty. Then we will be comparing that performance with the particular stock's performance. And if the stock outperforms the Nifty, we will choose or pick that stock for our selection. For that, you can use any screener. Okay. But if you do this, you will come out with a list of 300, 400 stocks for sure. Out of that, you have to choose only 30 to 40, and that final selection will depend upon another layering. Because large cap stocks generally cannot move more than 15% or 20% in such a small span of time. So we should rather avoid large cap stocks, stick to mid cap stocks. In fact, if you don't want to take more risk and don't want to go to small cap, then in that case, this strategy better works in the mid cap stocks. And then after you have a list of 300 to 400 stocks, we will add more rules so that we end up with 30 to 40 stocks in our watch list. And then we will only follow those stocks and try to identify momentum, and then we'll make money. For this entire concept, the time frame would be daily. There's no other time frame you can look into. The time frame has to be daily, not intraday time frames, 13 minutes, 30 minutes, 15 minutes, nothing. Only and only daily charts. Okay. All right. Now, how to identify the stocks, how to select the stock. For that, there are various criteria available. Okay. Now, if we want to compare this, you can go to tradingview.com, which is one of the best websites in the market right now, in.tradingview.com, for doing technical analysis. All you need to do is put your stock price, okay, put volume, just to choose a candlestick chart basically for the price and a column chart for the volume, and you're done. And you can then see the momentum and all those things. There are certain technical indicators also which we can use. There's a free version of TradingView which has some ads, but you can always block those ads if you want to through a pop-up blocker or something. So the idea here is to make sure that the stock selection which we do is uh, generally uh, only those stocks which have a very good momentum. Now, obviously for this, there is no ready-made indicator available in TradingView, but I can show you which indicator we generally use. Okay. We use a particular indicator which works well. Okay. It works nice. So you can use that indicator. How you can use it, I'll tell you. I'll let you know about that. So I'm sharing my screen with you all now of TradingView. This is a tradingview.com website. You can create a free account here. You don't need to pay anyone anything for this subscription here. Just there would be a lot of pop-ups. You can block those pop-ups through any extension you can install in your browser. Now I've put, let's say, Adani Entertainment. Fundamentally, whatever Adani Group stocks are, we are not right now bothered about that. Right now, we are bothered about something else. We are bothered about whether this stock has momentum or not. Now, this is the 1 year daily chart, which means one candle representing 1 day. Now, what do you see here? Look at this. That's a constant momentum and increase in momentum. Do you see this? There are obviously some moments of rest, and then there is again an increase in momentum. Which means that if you closely watch, you will realize wherever there is a possibility of momentum, I'll just show you this. This is how you interpret any stock. So if you see here, from this phase up till this phase, there was a very subtle movement of momentum. After that, there was more or less a consolidation phase, which was still here. And after that, once again, there was a breakout. So this breakout candle is very important here. Okay, now if you notice, there are a lot of candles with both side wicks here. And from here, once again, there was an increase in momentum. But after that, there was a reduction in momentum. So it's like the last station came and the brakes had to be pulled. And look at the starting and the end. It's always going to be like this. Again, starting and the end are big candles. Now, after this reduction in momentum, once again, there were brakes which were applied. So once again, if you see, brakes were applied up till here. Fine, up till here. Now, anyone who knows a little bit of technical analysis also will be able to understand that there is a downtrend, then sideways. And then look at this. Now, after you have spotted a candle like this, what should be your duty? After you have spotted a candle like this, what should be your duty? Your duty should be that now the momentum after the rest, that the train driver has taken enough rest. It's time to move. So maybe in the next candle, you could have bought the stock so that you can be part of the current, you can be part of the river.